We have a national debt of $17 trillion. How much of that does China hold?
I don't have the number.
If I have a chart here that says 1.3 trillion, that'd be about right.
That's probably
and
correct.
Japan next at 1.2 trillion. Let me ask you, I also have some information that with regard to this foreign debt, some 70% of it is actually held by governments, and some 30% is attributed to private foreign investors, Japanese banks, for example. So we've got $17 trillion debt, these big Asian countries with a lot of it. What should we worry about? Do you worry about the 17 trillion? Should we be concerned in this Congress about the fact that the Chinese and Japanese own so much about it, own so much of it? What do you worry about as Chairman of the Federal Reserve?
Well, I worry about, as we've discussed here, the long-term path of the debt and whether or not it's sustainable. U.S. government debt is regarded as the safest of safe assets, and it's very much in demand globally among investors who want security.
That's a good point. What rate of return do these investors receive today on U.S. debt?
Well, a 10-year government bond is a little bit over 2.5%, and so this is a safe return. And
why do they continue to purchase? Why do these governments continue to purchase our bonds, Chairman Yellen?
Because they have confidence that it's an extremely safe investment, and I hope it also suggests and believe it suggests that they have confidence in the Federal Reserve as an institution that's committed to maintaining price stability and a sound dollar. And so in addition to what Congress does with respect to future deficits, our management of the economy, our commitment to keep inflation as close as we can to our inflation objective of 2%. This is also an important
What alternatives do they have? And what could tip the balance away from them choosing to invest further in United States securities?
Well, I think
what's their next choice?
Well, they have many other choices of assets that they can purchase. I think if we were to lose their confidence, either by a failure to address long-term debt problems, fiscal problems, or by mismanagement by the Federal Reserve.
Well, let me ask you then about the long-term issue. And Senator King mentioned this. If the economy improves as you expect it to, the $221 billion we pay each year in interest on the national debt, that will double. Is that correct?
It depends what happens to interest rates, but yes, as the economy recovers and as inflation moves back toward our objective, the Federal Reserve eventually will begin to normalize monetary policy and raise short-term interest rates.
And so the $227 billion that we paid, and the $221 that we paid in FY13, or $227 billion that we expect to pay in this fiscal year, would double to somewhere close to $500 billion in interest on the national debt. Under that scenario, would it not?
Well, it certainly would go up.
Yeah. Let me ask you also, just yesterday I had the opportunity in another committee to have a conversation with you. You expect the asset purchase program to end in the fall of 2014. What variables could occur to make the Fed alter that decision and continue the asset purchase program?
So What we need to see in order to follow that plan is continued improvement in the labor market and an overall pattern of growth that is sufficient to cause us to project continued improvement.
Can you quantify that improvement? What degree of improvement?
Well, our objective is to make sure that the economy moves back to full employment or maximum employment. And we're making gradual progress. And if we've made considerable progress since we started the asset purchase program, whenever we meet, we ask ourselves the question, do we continue to believe that the economy is on a path that will take us toward our objective of reaching full employment or maximum employment? And we also think about inflation, which is running below our 2% objective, and ask ourselves, does incoming evidence suggest that inflation will also be moving back up to 2% over time? And if the answer to those two questions is yes, we will continue to reduce the pace of our asset purchases. Now, if the economic outlook were to change in such a way that we no longer felt that the answer to those questions was yes, then we would reconsider our plans.
Thank